Tiger Global's performance problems are mounting, with the firm losing $16 billion during the first 4 months of the year. The company's main hedge posted a 15% decline in April, extending the 2022 loss to 44%. Well, joining us now for more is Tom Metcalf from our finance team. Tom, what's going on? I thought they could do no wrong.
Yeah, well, this was their reputation, right?
No longer.
Chase Coleman, who's, really for the last decade or so, rode the tech boom, did fantastically, but now really in sort of dire straits. As you said, their funds are about down 50%, so huge drop, down 16 billion. Now they have about 19 billion under management. So yeah, extraordinary to watch.
Well, if Tiger's all about tech, if they're able to ride the tech boom, are we now in this scenario where their business model, their strategy is dead?
Yeah, they're certainly not saying so. Their response has been, look, we're humbled by this. We're obviously, sort of adjusting our models. But they did say, well, look, we have a great go-forward opportunity, I think was the phrase they used. So they're probably going to stick to their guns. And, I guess if you're a tech evangelist, you've got to believe it. But yeah, when you look at those, whether it's the big tech stocks or the private market valuations, it's really a bloodbath out there. So it's tough times.
I mean, what's really surprising is actually the speed of declines, right? And that sent shockwaves through hedge fund industries, investors, foundation, endowments, pension funds. Why did they just do so badly so quickly?
Yeah, well, I think it's sort of kind of almost not reap what you sow, but when tech's going up so much, everyone's kind of happy and piling in, and
when it goes down,
it's very volatile, right? I mean, you look at Netflix the last couple of weeks. I mean, I think it's down 2/3 from when I last looked at its market cap. So just huge shifts.
Yeah, these are the bull market darlings that are no longer paying off anymore. I mean, that contrasts with macro hedge funds. I mean, there is a wide variety in terms of who's doing well, who's not doing well. What defines the outperformers?
Yeah, well, I think it's following that big, broad trend of the markets where you can make an advantage of the volatility. So yeah, those macro hedge funds, which for years, let's remember, had done very poorly, are now sort of flavour of the month. And as we see these massive falls at Chase Coleman's fund, they're kind of reversed at the macro funds.